Okay, the market attempted a rally, but it fizzled out. We have the market closing lower on Monday ahead of our CPI data this week, which again, I've warned you several months ago that CPI had bottomed out, and I've been predicting it's going to continue to rise and eventually lead to an inflation freakout and likely collapse in the bond market with yields spiking higher, which is what I think is going to create a top for the market. One of the catalysts, anyways. I think it's 1973 all over again. Concerns about stagflation, but I have a recession that's going to create deflation. We're going to see a deflationary bust. The Dow was down 200 points, down almost 0.5%. The S&P was down about 0.25%, down 16 points. Still below that 6,400 area. Remember, we peaked on July 31st at the 6,400 level, just above it. NASDAQ down 0.30%. Russell pretty much flat, down 0.09%. The VIX got a very interesting candlestick today. It got a bullish inside day, possible bullish Harami pattern. We have the VIX up 7.26% to close at 16.25. Negotiations continue with China. Trump is extending the China tariff deadline by 90 days. Trump administration is negotiating with Mexico. They're negotiating with China. In a lot of these deals, like with the EU and Japan, countries that made deals, and again, a lot of good deals, unlocking some of the markets that were closed to the United States. We have the other countries that didn't make deals. Again, they have the tariffs. We were told, oh no, the August 1st tariffs, that's going to be postponed. We're going to have it. And again, I told you it's not. It's going to be associated with the top. It's going to be associated with this sell-off. Likely the next one as inflation begins to tick back up. It's going to be blamed on the tariffs. No, inflation's going higher because we're seeing an increase in the money supply. Tariffs do not cause inflation, but the market will believe that. The Fed believes that, and that's why, again, the narrative is, oh, the Fed's going to now cut in September. Again, the Fed is scared to death of Trump's tariffs, that they're going to cause inflation. That's why Powell's doing what he's doing. I don't believe the Fed's going to lower rates in all likelihood until we see the stock market top out and begin to crash. That's what's happened at the end of the last two bull markets. You finally get the Fed panicking, start doing jumbo cuts. I don't think this time is going to be any different. But we had the weak jobs report. The narrative is, oh, now the Fed's going to lower rates in September. They should have already done it in July. Now, again, the Fed should already be slashing rates. Fed does everything backwards. Now they're concerned about, they're hawkish and concerned about inflation when they should be dovish and concerned about a recession. Back in 2021, dovish when inflation was rising towards 9% with the CPI, telling us it was transitory when they should have been hawkish back then. And the Fed does everything backwards. If you believe Keynesian economics, you'll make the same dumb mistakes that the Fed does. Back in the Depression, they said, oh, let's take Keynesian economics to get us out of this. And it extended the Depression by 6 or 7 more years. It's a bunch of policies that don't work, that make things worse. That's the kind of lens that the Fed looks at the economy through. You have to understand this. So again, those people telling us we're going to get the September cut, I doubt it. I think we're going to go rally on into September or October, and then I think the market's going to top. I think we'll get a pullback first, but then I think we'll get a top. Then we're going to start seeing a rapid crash in the market, going to kick off the bear market. That's when I think the Fed will dramatically cut rates. They'll do jumbo cuts, probably 0.5% or 0.75% to kick it off. That's what they usually do. I think that's likely coming later this year. And we may see the crash. We may see the market peak in September or October, begin to crash, and the Fed might not react to it until November or December because, again, they're always late and they're always blindsided by everything. Just keep all of that in mind. We had the VIX turn sharply lower on Friday with the big red bar below this trend line right here, but we get a bullish inside day today on Monday to kick off the week. That's a bullish Harami pattern. If it's confirmed, we close above the high from Friday, and then we got to be able to get back above the 50. That's this green line right here. If you could get back above the 50, then volatility will return on the S&P 500. So I'll be watching what becomes of this candle pattern, this 2-day candle pattern, which is a bullish Harami pattern. A bullish inside day today being today's price is contained within the bearish red bar from Friday. That's a bullish reversal pattern. So we'll see what happens. Do we sell off? In order to sell off, we got to get back above the center line here on the MACD. RSI has to get back above 50, and the stochastic has to recycle back up. We have to get above the 50 level on the VIX here in order for volatility to return. Bollinger Bands continue to tighten, so an August sell-off is likely. Bullish reversal of conditions. Momentum flipped back to bullish on Friday. Most trend signals flip back to bullish, and we're going, that tells us we're either going sideways or up. If we're going sideways, we need to get a lower high and turn down. If we're going up, then we'll form a divergence on the RSI. Watching to see, we got green bars. I told you to be watching to see if that happens. It can confirm a lower high or a divergence in the more recent price action. We already have divergences that gave us this peak over here on July 31st. This could be another divergence point or confirm a lower high, either one. Sell off with the CPI. Be correct about that being a peak. Have a lower high and will diverge with the NASDAQ that did make a new high. If we go higher, then watch for divergence right here on the awesome oscillator, possibly the MACD, another reference point, and on the RSI in the daily time frame. That will happen if I'm wrong about this being a top here on July 31st. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel today. I thank you for your consideration for that. The NASDAQ moved to a new high, slightly above this previous peak, just a little bit above it there on Friday, and then a little bit higher today. Does a divergence now develop here, turn, or is it not yet done? But there is major resistance just directly overhead here in the weekly time frame on NASDAQ. Now, again, I warned you that a bottom was coming for the CPI inflation data. It's going to tick higher. It's not going to go back to 9% like we did over here. And this is when the Fed was so dovish. Now that it's dropped to a 4-year low, now they're extremely hawkish. They do everything backwards. In the Fed's world, up is down and down is up. That's why they make so many mistakes. I told you that inflation was going to bottom, and I told you when it bottomed at 2.3% a couple months ago, I told you I thought that was a bottom. So far, that's been correct. Went to 2.4%, and then we've been rising. We're now at 2.7. The headline number, that's that dark blue line you see right there. The core CPI was coming in at 2.8 there for a little while, and then it ticked up to 2.9. They're expected to rise again. Get that inflation data tomorrow. And I think earlier in the video I might have said Wednesday. Tomorrow morning, we're going to get that inflation data before the market opens. And again, it is expected to come in higher. Again, I've been predicting this. It looks like consensus is at 2.8 for the headline number on a year-over-year basis, higher than the 2.7 we've just got, which you just saw on the chart a moment ago. 0.9 on the core is supposed to rise to 3.1%. Month over month is supposed to be on the headline number at 0.2%. The month over month on the core is supposed to be at 0.3. Even if it comes in line with expectations, and maybe it comes in hotter, maybe it comes in cooler, but even if it comes in line with expectations, you're still seeing it tick higher on a year-over-year basis, as I've been predicting. I think it's going to go much higher, but not to the 9% level. I think we're going to go higher, and I think that will eventually cause yields to spike and bonds to collapse, and I think we'll get Jamie Dimon's crack in the bond market that I've been talking about. He's predicting that, so am I. He's going to be proven correct. So the inflation, CPI inflation, is expected to turn back up, and again, I've been right about that, and I think eventually this will lead to an inflation freakout that will eventually give us a market top in the coming months ahead. We could sell off in August with the seasonality, rally back up and go into new highs September or October. Don't forget, on Thursday, we're going to get the PPI wholesale inflation. And last time we had the CPI tick up and the PPI turned down. What happens with the wholesale inflation when we get the report later this week on August 14th on Thursday? So listen carefully. All I'm saying is that the inflation data, which I believe is going higher, calling up bottom at 2.3%. I believe the market could sell off with this because concerns that the tariffs are now here and they're going to cause all this inflation. I think we could see a sell off on that, but still go higher. You know, in 2021, inflation was rising. Inflation was rising sharply And yet the market shrugged it off until it peaked out in 2022. And I think you could see the same thing where we sell up, but then we go higher. But eventually, I think we're going to reach the levels I'm talking about in the weekly time frame and develop a top. So I do think we're going to see beginning of an inflation freakout, a sell-off for our seasonality for August, go to make new highs. I think we're really going to see a much bigger inflation freakout later in the year. I just want to be clear on that. Now, could the inflation be the catalyst right now for a sell-off? Very, very possible. We're also expecting more tariff news out of the Trump administration either this week or next week. More news about semiconductors and pharma. But if we do see inflation tick back up, again, there could be concerns about Trump's tariffs, I think is likely. One other thing, we had the Fed pretty much cancel the September rate cut. Got the weaker jobs report. Now the market's anticipating the Fed fund futures, the betting markets are expecting a rate cut in September because of the weak jobs data. And again, saw the numbers dramatically revised downward. But the Labor Department's been putting out such bogus numbers for so long, you just don't know what to believe. Are these the real numbers, or are they artificially pushed down, or are they artificially being propped up, and we just simply don't know? It'll be interesting to see what the revisions look like when we get the next jobs report come the first week of September. The market, because of that jobs report, is now anticipating, the Fed's going to cut, but we'll see what those revisions look like going forward with the coming report here in September. The NASDAQ pushed slightly above the previous high. I told you again on July 31st that I thought we had a top in the market. So far, the S&P, that high is holding, but we moved slightly higher last week, and then during this session, the NASDAQ still slamming into major resistance in the weekly time frame, a little higher than this level because of the rising trend line in the weekly time frame, which I again showed you those trend lines in the weekend update. He's making lower high. Now, sometimes they diverge at turning points, and when I say turning points, I'm expecting a pullback for a seasonality. I'm not expecting to go back and take out the April lows when I called the day of the bottom, predicted this rally to new highs. So I predicted that rally. Major support here, we are at major resistance, and we're still at it over here. Maybe we still go a little bit higher and end up straddling along that trend line. It's possible that we sell off with the CPI data if it comes in hot. We'll be watching. Sometimes it comes in hot, the market shrugs it off, so you just never know. Watching to see, will the S&P join the NASDAQ and make a new high, or will they diverge and NASDAQ makes a higher high, but the S&P makes a lower high, as they often do, sometimes at tops and bottoms. We'll be watching. This is a 60-minute chart here. We moved above the 78.6 Fibonacci. We moved above the 78.6 Fibonacci, and we got 100% retracement and moved to a new high. So now we're selling off a little bit. Does this peak now hold? We did complete a 9 count. I talked about this over the weekend. We did complete a 9 count here on the 60-minute chart. Went a little bit higher, and now we're selling off. Does that mark a peak here, or is that just a short-term pullback, and then we get a trend extension and still straddle along that weekly trend line? I'll be watching to see what happens here. We get a sell-off with the CPI data tomorrow. 9 count to mark the bottom, a 13 count mark the peak over here on July 31st. S&P had a similar count, but it didn't complete. We closed below the bar from 4 bars ago. We got up to bar 8. We started off the session, and we ended up being flat right there, not being above the bar from 4 bars ago. So we didn't complete it. We ended up popping a little higher, then selling off and going back to the trend line. Now, the S&P has still this possible bear flag. Might be a channel if we go try to make a new high. But here's where I called the top. Told you what I think. I have the guts to tell you what I think. Now, I could be wrong. I'm just giving you my opinion. And my opinion, I told you right here, I thought we had a top. NASDAQ, I was wrong. We went a little bit higher. Am I going to be wrong about S&P? And we go higher, and then we top out. If we do, we'll form a divergence on the RSI. About that possibility back over here, that if I was wrong about the top, that would still happen. But we got this, the belt hold in the daily time frame. That was this gap and trap. And so far, we're getting a lower high just above our 78.6 Fibonacci. And then going higher today, but then coming back to the trend line. So does this now begin to break down and we resume this decline right here? Or Am I wrong about the top over here on July 31st? And we go up and get one more peak, end up forming a divergence before we get a sell-off. I do think we're going to get a sell-off here in August. I think we'll have the volatility, and maybe it's already started if I am correct. If I'm wrong, then we go sideways and it's postponed shortly. We still get it just a little bit delayed as a divergence develops on the RSI in the daily time frame. We do have a divergence on the RSI in the daily time frame on NASDAQ. I wanted to show you the 60-minute charts, slightly overthrowing that 78.6 Fibonacci after filling the gap right here. Does this now resume the decline or rally? I'll be watching the upper channel line, and again, major resistance levels in the weekly time frame, just directly overhead. Turned off those resistance levels right here, but the further right you go to the chart in the weekly time frame, the higher up they go. So it's just a little bit higher than that now. Reach it, we'll see what happens. Or does the S&P diverge with the NASDAQ? And again, we had a divergence Friday, but it got a little bit better defined as we went just a little bit higher. Went a little bit higher, and we got another reference point of a divergence there, and that's taken us again now back to this trend line right here. So you still have the bear flag. Remember, I talked about a bear flag over here, and it did break down, but there was no confirmation, no follow through to the breakdown. Ended up gapping back up and going back up and redefining the boundaries of the bear flag. We still have a bear flag, but it expanded into a larger pattern. Now, again, it could be a channel if we bottom out here and begin to try to rally to the upper end of the channel and move above this high right here. Again, I told you I thought this was a peak here. I showed you why, because again, we are at major resistance levels. We may slam into resistance again, form a divergence on the RSI. Most people predict things after they already happen. I try to tell you what I'm thinking. Because I tell you what I'm thinking when it happens, I could be wrong. Predicted things like other people do after they already happen, well, then I'd be right all the time. Very few people will tell you what they think. Very few people have the guts to do that. I do. Or the S&P has got a lower high. Does it go up to that level? Well, NASDAQ did. It could, but I still think you got a top here. See if I'm wrong about that. Even if I am wrong, we're still going to just likely form a divergence on the RSI. We'll go higher, and then it will turn quickly back down. This is the 15-minute chart. You can see it really well on these intraday charts. Look at the 30-minute chart. Nice divergences forming. Back to our key support here. Again, the bear flag. If we break down, we got to come back down, start taking out these support levels. Longer-term moving averages right now. We're at the 50 period here on the 30-minute chart. Do we have a bear flag, or do we have a channel? We get a lower high and resume the decline, or do we go up and we go slightly higher and form negative diversions on the daily chart? I'm not predicting we do that. I've already predicted we've topped over here. I always tell you what could happen if I'm wrong. Doesn't mean I'm predicting new highs, and I could be wrong. We could still do it. I was wrong about the NASDAQ. It moved slightly higher, a few points. Because I'm telling you, hey, we could go up there, doesn't mean I'm predicting that. I've predicted that we've topped, and I think that correct. Just telling you what could happen if I'm wrong. I always do that because it's not my way or no way. I could tell you, well, hey, we've got divergences over here, and I told you why I thought we had a top in this area here, why I called a top this day, but I don't dictate to the market what it's going to do. The market does what it's going to do. I evaluate it based on mathematically based indicators, trend lines, moving averages, support and resistance levels. You know, technical analysis isn't some fake crystal ball that you look into to see the future. You use mathematically based instruments to try to evaluate what is going on. Got these divergences on the 30-minute chart, the 15-minute chart here on the 60-minute chart. I thought that they would produce a top. Still think that, but I could be completely wrong. I'm just telling you what I think. That's just my opinion. I do not know the future. Not that because of major resistance levels. I still think that, but if we do go higher, then maybe we go and get the divergence on the daily chart. If we drop back below the 50 and the 200 here on the 60-minute chart, you'll likely see an immediate death cross of the 50 below the 200 period. And again, we could sell off. Now, I've talked about that we do not make a new high. And if I'm correct about this peak over here, then again, this whole move down might be just a shallow sell-off. It might just be small. But I think We can get a sell-off that lasts longer in August, towards the end of August. If that is the case, again, we might see something like this ABC that I've marked here. It might give us something just a little bit bigger. I told you that even if we get something bigger, you could come back and fill maybe some of these gaps here. But I think it's going to be a pullback surrounding the 50 and the 200 period moving average, maybe in between those levels in the daily time frame. So again, I'll be watching. Do we lose these moving averages? And if so, do they get a bearish cross here tomorrow or later this week? But I am playing these divergences here, resistance levels that I've talked about. Now, again, I've talked about the seasonality. We did see July rally. We went sideways for about 2.5 weeks in July. From July 3rd, we went sideways 2.5 weeks, and we saw the uptick towards the end of the month, and they're late in June. So the seasonality did play out. We talked about this. Now we have the seasonality negative for August. It's likely going to play out. We'll see an August bottom. Rally likely resume on into September and probably October. I think you could see an October top. I really think you could see a sell-off and then one final high. It's going to go up to 66 or 6,700. I think it'll be a powerful move to the trend lines I've been talking about, but then I think we're going to top. So will our seasonality play out? I still think it's very much in play. Even if the S&P goes and makes a higher high, it might be delayed, but I still think there's a high probability we get the August sell-off because the market has become very, very overbought. I've got people now telling me, no way the market goes down. These are the same people that told us back at the bottom there was no way it was going to go up. The market's going sideways. So these people blindsided, and so the sell-off doesn't happen immediately. We sell off and then we rebound. Then they jump to conclusions, and they become they jump to the false conclusion that because the sell-off hasn't happened yet, we're going sideways or whatever. It's not going to happen. Remember, the same people that are telling us there's no way we're going to sell off are the same people who are telling us there's no way we're going to rally back at the bottom when I called the bottom back on April 7th. I showed you these divergences on the 15-minute chart, the 30-minute chart. And maybe the divergences are only giving us a short-term pullback and we still try to go higher. If we get an inflation sell-off, again, we could see the bearish bear flag patterns begin to break down. As these divergences have developed, it gave us a sell-off today. So think about the intraday charts. You never know, is it a reversal or is it a much bigger, or is it just a pullback? You got to remember, these are intraday charts. Weekly, it's not the daily. But we did take out the 200 period here in the 5-minute time frame with the divergences that developed. Another reference point of a divergence, and we sold off. Let me mark that on there. And again, if we now drop here below the 200, we close just slightly above it. If we drop below it and hold below it, then the 50 drops below the 200 here in the 5-minute time frame, then we can sell off. I'll be watching this gap right here and the low here with our sell-off from last Thursday, and then we rebounded back up, still making a lower high. This is not the peak over here. This is only a 5-minute time frame, but do we drop below this 200 period and stay below it and get a sell-off, or do we bounce off of it and end up trying to go make a new high? One of the reasons why I call it top is because of the trend lines in the weekly time frame. Here at their linear scaling from the 2023 low, slamming right into it. If we do go higher, that trend line goes higher the further right to the chart you go. So again, possible we slam into it again if we try to make a new high. And that's why I'm saying the S&P can make a divergence. I could be wrong about the July 31st top. If I'm right about it, we got to break down from the bear flag. This is one of the reasons why I called it top, when I called it top. And even if we do go higher, you're still slamming into this major resistance level. This is our linear scaling in the weekly time frame. This is our log scaling. And you know, even with the CPI, even if it comes in hot, sometimes the market shrugs things off. So I could still be wrong. If I am wrong about July 31st being a peak, because we got that bearish engulfing candlestick, that red candlestick you see right there, it never got confirmed. So if I'm wrong, we go up and we slam up into the trend line again. Again, you can see the further right you go to the chart, the higher up it goes. It go a little bit higher, but you'd have resistance directly overhead. Even if we make a new high, you're still slamming into resistance. Over here, we hit it a couple times. Look at this in late 2021. We hit it a couple times right here. This level sold off, went back up here, slammed into it a little bit, much bigger sell-off. And we hit it a couple weeks over here at our December peak in 2024. So again, I'm looking for a turn off at this level, and I think we have a top on July 31st, but if I'm wrong, we're going to go up and hit this trend line again. So just be aware of that. Even if we make a new high, if I'm wrong about the July 31st peak being a top, you still have major resistance directly overhead. Same is true for the NASDAQ. Again, it's slamming into the trend line here from our 2022 low, this channel that I've drawn right here. Again, moving slightly higher last week above the July 31st high. Still slamming into resistance. This is our linear scaling. Same is true for our log scaling. Our log scaling from the 2023 low, the trend line right here. Again, we slammed right up into it. That's why I called it top on July 31st. But again, the further right you go to the chart, the higher the trend line goes. So we try to inch a little bit higher with these weekly trend lines. But I don't think it lasts very much longer. If it does, and we still might see the S&P and NASDAQ diverge from one another. On the daily time frame, the S&P still might form a divergence if I'm wrong about the topping here. But again, broke down from a rising wedge pattern on the S&P, back tested it, and that's when I call that top right there. The peak was 64.27. Just under the 6,400 area here. We broke down, we back tested, and then we confirmed that candlestick dropping below the 10 and 20 period. We're back above the 10 and 20, but if we sell off further, you can see a bearish cross of the 10 and 20 period moving average. That's a red line, the 10, the 20 is the blue. We can move back towards our 50 period, that's a green line right here, or the 200 period moving average, or the cloud, or somewhere in between. Shallow pullback would come back here towards the 50 or just below it. A deeper one would move closer to the 200 period. But this is what I think is going to happen. I think we're likely in wave 4, if I'm correct about this peak right here. Completed wave 3. If I'm wrong, we'll still see a divergence develop here and maybe get another reference point here on the MACD if we go up and slam into resistance again. But it's going to be short-lived if it happens. Again, I believe we topped, but I could be completely wrong. Just my opinion. We're going sideways, so either scenario can play out. Even though I think that this is a peak, I could be wrong. Because we've seen signals go back to bullish, meaning we're either going sideways or up. You're going from bullish to bearish back to bullish. And that's because we're going sideways. The same thing over here before this sell-off. I don't think we get a sell-off like that. Again, I called the bottom over here, predicted this rally. I'm just predicting a pullback here, a bigger pullback than what we've seen so far. S&P daily. Now, if I'm right about the peak, that has completed primary wave 3. I think we get primary wave 4. Again, under the 50 and at the cloud, or maybe a little bit deeper than I marked here. Looking at the 50 and the 200 period as a place where a bottom could form. Bitcoin's been finding support at the 50 period moving average. If the S&P and the NASDAQ do the same. If I'm wrong about this being a peak, then the wave 3 did not complete yet, and it'll complete at a little bit higher levels, but there's major resistance still overhead. We're going to end up forming a larger divergence, much like what we had over here between December and February. But I think that when we go higher, I think we'll go much higher to form that divergence towards 66 or 6,700. We stalled at the the low 6,400 area. What was it? 64.27, I believe. We're going to sell up. The stochastic has to roll back over. MACD has to remain negative. And then again, I think if we move down towards the center line, MACD can bottom near there or just underneath it. If we do sell off, I'll be watching to see if we end up selling off with the CPI data. Not only do we have the resistance in the weekly time frame, but you also have this resistance in the daily time frame. If we draw a parallel boundary from the 2023 low on the S&P to our April low and pull it up and just draw a parallel from the December high, we've slammed right into it. Again, another reason why I told you that I thought we had a top on July 31st. Bring it up close, you can see we slammed right into that trend line with our back test of the breakdown of the rising wedge. And so we broke down. Do we have a bear flag? And now we continue down towards the 50 or the 200. And I'm looking at the shorter, or I should say the smaller Fibonacci retracements, the 2.36, the 38.2, because they're near the 200 and the 50 period. I think we're going to get a more shallow Fibonacci retracement, but I think it will be bigger than some of these retracements that we've seen along the way up ever since I called the very day of the bottom and predicted a rally to new highs. Everybody was telling us we were going to crash, and people believed that. going to crash when everybody believes that we're about to crash. When market breadth indicators are in single digits as you're slamming into major support, as I talked about back at the bottom. I think we get a bigger pullback, but then I think we still go higher. To the trend lines I've been talking about in the weekly time frame. Again, getting above the red trend line from the 2022 peak over here and moving to the black trend line, eventually building momentum to get above that level, moving towards 66 or 6,700 and completing this channel. That's what I think is going to happen. Then I think we're going to top, and I think that's just months away, just a few months away. I do think we'll pull back to build momentum to clear this trend line. And same thing for NASDAQ. It did move slightly higher than the July 31st peak. I was wrong about that, but I still think you're going to get this wave 4. I just don't think wave 3 was likely done with NASDAQ, and sometimes they do diverge. And maybe the S&P joins it. Maybe I'm going to be wrong about the July 31st with the S&P, and maybe the S&P ends up getting that divergence on the RSI. Certainly possible. I was right about the April 7th bottom on NASDAQ, but I was wrong about the July 31st peak. Still may be right about the S&P, but again, I could be completely wrong. I have the guts to tell you what I think. We'll see if we just popped a little higher and then that terminates a rally, but there's still room if those weekly trend lines straddle along them for a bigger sell-off. We'll be watching what happens with the CPI. 60-minute charts, these MACDs are rolling over, so we'll be watching. Do we drop below the 50 and the 200 and the cloud and start seeing the sell-off resume that we saw there really began on July 31st. And with the pop to new highs on the NASDAQ, here's another way to count it, possibly 3, 4, and then 5. That may or may not be done yet. We have this RSI divergence. So again, it may be done, may still take a little bit longer. We'll be watching. NASDAQ and S&P diverge from one another. And again, mark this one a little bit deeper, closer to that 200 period moving average, or moving towards it anyways, beyond our 50. But looking at the 50 and the 200 period for a possible bottom when we get a sell-off here, NASDAQ daily chart. The rally can continue. We can see the MACD try to get back up and form another reference point of a divergence. It's still diverging. The MACD is getting a lower high, but it might try to get back above the signal line if we buy a little bit more time. These divergences also the reason why I called a top when I did.